Central Bank of Nigeria has released an exposure draft of guidelines for the management of dormant accounts, unclaimed balances, and other financial assets in banks and other financial institutions in Nigeria. The draft guidelines are being issued in response to requests from banks and other stakeholders for further clarification on the procedures for managing dormant and inactive accounts. Take a look at some of the details of those draft guidelines. So the eligible accounts are dormant accounts of 10 years or longer. Those that are exempt, government-owned accounts, and then accounts that are under litigation or being investigated by regulators. The funds are proposed, again, this is draft, to be moved to an unclaimed balances trust fund pool account, which is a UBTF. The list of those owners of the accounts are supposed to be published annually, and then it is proposed that those funds be invested in Nigerian Treasury bills. Also, let's look at some earnings, starting with GTCO 2022 financials out, double-digit growth in gross earnings and as well as total assets, net interest income. However, we're seeing profit before tax and profit after tax falling. We'll get to our guest on why that is. Also, United Bank of Africa, they're releasing their unaudited first quarter financials for this year, and you can see double-digit growth in their gross earnings, net interest income, profit before tax, and profit after tax. Joshua Odebisi, who's a senior research analyst with Rand Merchant Bank Nigeria, joins us to dive in. Joshua, good morning to you. Thanks for joining us. Kicking off the week with some bank earnings. Let's start with GTCO. What do you make of their performance?
Well, obviously, the 3% dip in profit after tax is a bit disappointing.
Yeah.
But if you look at it on the balance of things, with a 35 billion impairment from Ghana alone, that's, you take that out and they would have done significantly better than they did in the previous year. So that shows that there's quite a lot of room for growth. They did do some growth in their top line. Their gross earnings were up. Total assets were up. Net interest income was up as well. So improvements all across the board. Is just that cost factor, that single impairment that really impacted the...
Well, let's get into it. So let's do a reminder again. If you want to take, because we did this with what was it, UBA, Zenith, EcoBank, and so on and so forth. So again, Ghana's fiscal issues, if you want to take it from there, had an impact on banks like Nigerian banks that had holdings there. Yeah.
Yeah.
Okay.
Yeah. So basically, when Ghana came out and announced that they were going to do sort of an exchange program for some of their debts, in order to convert, especially their Eurobond debt to local currency debt, there was, obviously some impairments were going to have to be taken by the banks, and so the value of those debts on the bank's balance sheet was going to be reduced. In the case of GTCO, what we saw was a 34% reduction in their Eurobond, the value of their Eurobonds, so 34% just for that. On local currency bonds, it was about 27%, I believe. So overall, that's really what impacted the banks because they had to take impairments. That means that the value of their holdings on their balance sheets went down by that amount.
Yeah.
And so they had to report that in their financial statements.
Okay, so you're taking a loss on what you hold in those assets.
Exactly.
All right. So if we take a look at the other banks and we rifle some of them. So you're in fact, by the way, you nailed it. So when I asked you last time you were on here, you did say that GTCO's impairment would be in between Zenith, which is about 123 or so billion, and UBA, which is a 17 billion, 35 there. So looking ahead with all these other banks that were impacted, this is, can we call it so there's Zenith 123 billion, and we'll go through the others as we're speaking. Is this, can we say this is a one-off, or do you see any, I know Ghana is still trying to get a loan from the IMF and blah, blah, blah. Is that going to, could we see further impacts going forward into 2023 for the banks?
Well, at the moment, things seem to have stabilized around the original decision. Like you said, they are looking to source some funds. So if that should happen, then they should be able to meet their obligations going forward. As long as there isn't a new round of debt exchange or anything negative announced by the government of Ghana, then we shouldn't see further impairments specifically related to that on their 2023 numbers.
First stuff. All right, so going back to GTCO, what kind of, I guess, year ahead? I mean, I know we're going to probably get the Q1 numbers later, but what kind of year ahead are you forecasting for GT for 2020, fiscal year 2023?
Well, I mean, due to the fact that we've seen continuously rising interest rates, we're probably going to see a very good year from them.
Okay.
Regardless of what happened in 2022, we've already seen the Q1 figures from UBA, and they're pretty outstanding. So I think that points towards another solid year of growth for the banking industry in general.
Okay.
Obviously, there will be varying results based on the different positions of the banks, but I think that GT is in a strong position, especially with their holdco structure, to be able to move forward and make more profit.
Okay, great stuff. Let's now move to UBA. Now the GT was full year 2022. I think UBA as well, they first out the gates with their Q1 numbers ahead of all the other banks, right?
Yeah.
You guys wrote a note on that, Rand Merchant Bank, Nigeria, looking at those figures. So if we put up UBA's numbers now, it looks healthy, Joshua. Well, let's go through it.
Healthy is a bit of an understatement.
Okay.
You're looking at almost
blockbuster.
I mean, almost 30% improvement in profit after tax.
Yeah.
If that run rate holds to the end of the year, then you're looking at even higher profits than they announced last year, which was impacted by Ghana. So you would conservatively expect them to make significant growth, at least double-digit growth in profits and profitability. But that's across the board: earnings, balance sheet, total assets,
income,
everything.
the whole 9 years. If I mean, for the big banks, is it mostly about their, and of course, net interest income, help me out, is the difference between the interest you pay to your depositors and then what you earn on loans and stuff, right?
Exactly.
Is that, if you look at one of the drivers for how well they did, is that part of the story, net interest income?
Yeah, so all that goes back to the fact that interest rates, the MPR, has been going up significantly.
Yeah.
So yes, they are paying higher interest expense because of the fact that the minimum savings rate has gone up. So in theory, the amount they're supposed to be paying to depositors has gone up.
Yeah.
However, the amount that they're getting back from their loans and advances and from the investment securities has also gone up significantly.
Right.
Way more than that increase in their deposits.
You talked about the run rate, and just to help our viewers, you're saying basically if now I'm asking you essentially what UBA's 2023 could look like based on this really strong result. So if you could define, you're just saying that if you project this number for 4 quarters, then big time performance.
So basically, it's just saying all things remaining equal, if they can maintain this performance from Q1, if you just multiply it by 4, you say, okay, this is, a rough idea of where they could end up. But of course, we know that a lot of things will happen over the quarters, so it will vary. But anything close to that will still be an outstanding performance.
Okay, so what about the rest of the banks? I mean, I know we'll start getting Q1 numbers now from all these other banks. The banking sector for Nigeria, what kind of year do you think is in store? I guess, are you going to link this back to the NPR possibly continue to climb? Because we just talked about inflation in our last segment. And so, how do you see the other banks, the banking sector performing then?
Well, if the pressure remains on the Monetary Policy Committee to continue to hike rates, and rates do continue to go up because they want to close that gap, the real interest rates gap between interest rates and inflation, then obviously the banks will be the ultimate beneficiaries of this, and we will probably see core banking go up. Obviously, there might be a bit of a negative impact on loan growth because the higher interest rates are, the less likely people are to want to collect lending from the banks.
Yeah.
However, we saw that again last year where NPR was going up significantly, but the bank's loan book kept growing. So if that were to happen again, and it's not directly linked to maybe FX devaluation, for example, then we could possibly see further gains on that front, and that's just core banking. On the non-core banking side, we're talking about higher transaction rates, obviously a lot of trading gains and a lot of FX revaluation gains. So if a bank has a net open position that's positive and they're in the green for their dollar or they're long on their dollar, then probably we'll see some gains on that as well. And
just again, just all these terms are using the FX reevaluation gains. Basically, you're holding FX, and if the price is moved, you would then gain on your FX that you're holding as a bank. Exactly. What are challenges? I know we've already talked about. So, is Ghana still possibly a risk looking for? What other challenges would the banks be facing this year?
Well, I think there would generally be macro risks. Like you mentioned, Ghana is. I think most managers you talk to would say probably that's a little bit in the past now. They're less worried about that because they've also reevaluated their risk assessment based on what happened with Ghana. So they will be a lot more stringent going forward. So that the risk of that is a little bit more reduced. But across the broader sub-Saharan Africa, there might still be one or two potential issues.
Okay.
But that's purely speculation at this point.
Yeah.
So going forward, I think that they will just try to keep their head above water and to remain cautious in their expectations, in their earnings expectations, in their balance sheet growth expectations. But even if they are just conservative, we've seen how the banks have grown recently in times of adversity. They continue to post solid growth, and only a very massive outsized shock like Ghana was able to drop that for some of them. And others were still able to grow their profitability regardless, like UBA.
Yeah, so net, when you look at the positives and you look at the challenges, it's you're more bullish than anything else on Nigerian banks. Great stuff. I got to ask you about dormant accounts. If we pull up that list again, the draft proposal, I think was released April the 6th or so from the central bank. What do you make of this? Because they're saying that they could be. I mean, they're going to get speak to stakeholders, and so on and so forth. What do you make of this possible use of dormant account funds, which will be reviewed annually with the owners and so on, to buy treasury bills?
Well, I mean, so that's like the last point on that list.
Because
there are a lot of steps that you have to get through to get to that point.
Yeah.
But the truth is, if you think about it, let's just take a measure. Generally we know that the CBN likes to debit CRR from banks at a very, very high rate, higher than the quoted rate, basically. Now, in that situation, you would imagine that if the banks could, in theory, they would like for a lot of that to not be money that they are currently or actively using. So if they can push a lot more of the dormant funds in that direction, that would be great. Now, if you remove that from the system completely and entirely, then definitely the bank's deposits will reduce. And that will have a negative impact on them being able to give out money and basically make money on those deposits. Now, buying treasury bills with dormant account money, I really cannot say, because it sounds like a little bit of a fantasy to me. It's just a little bit out there. But at the same time, I think that we've seen that the CBN is more than willing to try
new things,
out there ideas,
out of the box
thinking, exactly. I think we can chalk this up to out of the box thinking.
When we look at, because we're just talking about the assets for GT and UBA and so on, looking at the financials, dormant accounts count. The balances obviously, they count towards the total deposits and so on, right? Because it's still money sitting there.
Yeah, exactly. You have to put it on your balance sheet. Just because it hasn't been touched in 10 years plus doesn't mean that it's not there anymore. So it still effectively counts as funds in the bank's custody.
Oh, okay. I'm clear now. So you're saying that if you were to, in addition to the CRR, cash reserve ratio, and I don't know, I know we have the MPC listing as well. If you were to take that away, you're essentially taking out part of what makes up the deposits for these banks. So that could have an impact on, depending on which bank it is, big tier 1, tier 2, could have an impact on their results as well. Okay, well, that's very interesting. But then you'd have to counterbalance that against what you would yield from investing in treasury bills or any other securities. Interesting stuff. Joshua Odebisi, Senior Research Analyst, Rand Merchant Bank Nigeria. Thank you so much. It's always a pleasure having you join us to talk about the banking sector. Appreciate your time.